Hello everybody, this is Keith from CryptoCoinMindSet. I hope this video finds you well today. And in today's video, as always, I'm here to help you get your mindset on crypto. We're going to be talking about allocating your money into a crypto investment portfolio. We're going to talk about the investment risks, how much you should invest according to professionals into crypto as part of your investment portfolio, and some of the things you might want to consider when deciding how to allocate your money. And if you stay through to the end of this video, I'm going to tell you about a cryptocurrency that I am slowly investing in, growing my bags, that is positioning itself for great longevity here in the space. So stick around for that. We'll get to that at the end of this video. But right now, let's talk about allocating your money and growing a crypto portfolio. Now, as always, everything I'm talking about today will have a link down in the description below. So make sure you head over to my blog, CryptoCoinMindset.com, find this particular blog post, and read in detail about how much of your portfolio should be allocated to cryptocurrency. So let's hit the answer straight off, and then we'll get into some of the nitty-gritty. Top financial experts say you should consider putting between 1 and 5% of your total portfolio into crypto assets. Now, there are a number of things to consider when you're doing that, and it can be easy to get distracted and not be able to completely decide easily what to invest in, or at least invest in that is going to give you good, steady potential growth with top cryptocurrency projects. And if you're interested in the portfolio that is generally considered to be great for initial investors, guess what? Link to that article will be in the description below, as well as the video I did on that. But the article goes into a lot more detail. So make sure you head on over to CryptoCoinMindset.com and check that out. Now, before we go any further, first things first. This is not financial advice. I am not a financial advisor. I'm just some old guy on the internet who's got a lot of experience, who's invested in cryptocurrency for, good God, almost like several years now. And I've learned a thing or two about a thing or two.
At Farmers, we know a thing or two because we've seen a thing or two.
We are farmers.
Okay, let's jump into it. So let's start out with the question. Why should you even consider putting crypto in your portfolio in the first place? I'm sorry, but that's a legitimate question. Let's face it, cryptocurrency is probably the most volatile asset on the planet. As of the recording of this video, Bitcoin's previous all-time highs was around $65,000. We are more than 50% off of that particular mark as of the recording of this video. So why would anyone want to be into an asset that is that volatile? And now I know we're talking, or in this particular case, I'm talking about Bitcoin, but let's be honest, all of cryptocurrency, because some cryptocurrency assets that you could be invested in might be down more than like 80% right now. Here's why I would argue that you need to consider allocating some of your funds into cryptocurrency. So we're going to take a look at the Bitcoin chart from 2010 to 2023. And I want you to pay particular attention to how the price action in Bitcoin has done nothing but increase. So even when it hit whatever the low is for the particular year in question, it is almost always higher than the previous low. There are only, I think, 2 exceptions, and we're going to go check through that. Look at this. When Bitcoin started in about 2010, it was less than a penny. Came to an all-time high that year of about 40 cents. Then, here we go, start of 2011, 30 cents to a high of $32, a 1,467% increase in that year. Now, some would argue, well, okay, that was when all the OGs were just getting into the space. Satoshi was sitting there mining Bitcoin, et cetera, okay, fine, whatever. Honestly, if you go to the About Us page on CryptoCoinMindSet, you'll find out that this is about when I was introduced to Bitcoin at approximately 29 cents at the time. And boy, am I upset with myself that I didn't bother to invest at that point. But I don't want to digress. But take a look at these yearly starts year over year. We're talking less than a penny in 2010, 30 cents in 2011, 2012, $4.70 from 30 cents, 2013, $13.30, 2014, $805. How many people would love to get an $805 Bitcoin? Just saying. Now, here's one of those year over years that was negative. 2015, $318. Okay, but then look at the next year, 2016, $434. 2017, $966. 2018, $13,657. Again, that was what? A 1,375% increase year over year. Now, then the argument comes, well, then Bitcoin went into its bear market, and in 2019, $3,844 through 2020, which was $7,200. Again, even now, wouldn't you love to get a $7,200 Bitcoin? Then we're talking 2021, $28,951. Right around the same price Bitcoin is today. Then 2022, $46,379. And at the start of 2023, around $16,500. So even from the start of 2023, as of the recording of this video, we're talking $29,100 as of the recording of this video. So why would you not want Bitcoin or cryptocurrency in general as part of your investment portfolio? I think that answers the question. But again, if you want to talk more detail, make sure you find the link to the article that we're referencing right now as to how to allocate your money wisely to a cryptocurrency portfolio. Link in the description below. Let's take a quick look now at potential crypto investment risks. I mean, let's be honest, with all the positives that come with something, there's always negatives. So with the potential for cryptocurrency gains or monetary gains, there's always the potential for cryptocurrency losses that come in the form of risk. So let's take a look at some of those risk factors right now. We've already talked about this one, especially as we just looked at the chart of Bitcoin. Volatility. I keep saying it, and I believe if you actually do the research on it, you will find that cryptocurrency is the most volatile asset on the planet. Volatility is a real thing, and it's a risk that needs to be considered. I go into great detail about that in the article, so make sure you head over to CryptoCoinMindSet and read about that. The next cryptocurrency risk is regulation, or currently, as of the recording of this video, lack thereof. If you live in the United States, you know that recently Congress has started to put bills forward to speak to the regulation of cryptocurrency, because right now the only kind of regulation is regulation through enforcement that we've seen by SEC Chairman Gary Gensler, who has done nothing but sue everything that moves in the cryptocurrency space in an attempt to, I don't know, if you ask me, pad the coffers of the SEC so they can continue to go and just like wreak havoc in the cryptocurrency space. But there needs to be some kind of common sense regulation to help businesses, companies, banks decide what cryptocurrency assets are worthy of their investments. Cryptocurrency regulation definitely, or lack thereof, definitely a consideration as a risk factor for putting your investment dollars into a crypto portfolio. Read more about it on the blog. But another crypto risk factor to consider are the potential tax implications. Because with this lack of regulatory clarity also comes the lack of tax clarity. Now, for those who are not centered in the United States, there are opportunities in countries across the globe to be able to go and find crypto-friendly regulations and taxation to build your crypto business, to invest in cryptocurrency, to otherwise be able to secure your financial future with regard to cryptocurrency. And I link to a lot of that information, again, in the blog post, so make sure you go ahead and check that out. But right now, in the United States especially, tax implications for cryptocurrency is definitely a risk factor that needs to be considered. But once you look at all those risk factors, then the question becomes, well, then how do you allocate your money? How you come up to the decision on what and how much cryptocurrency, despite what any of the professionals say, or hell, for what I say for that matter. Again, remember, not financial advice. I'm not a financial advisor. So you have to decide what your risk tolerance is for not just cryptocurrency investing, but stock investing, gold investing, other precious metals, whatever it is that you're allocating your portfolio money into. Deciding on risk tolerance is very subjective and personal. There are a lot of factors that even play into that, including what's your time horizon and you know, for some of us who have been burned before by different stocks and cryptocurrency investments, what's the chances you want to be burned by that again? Probably not high. So again, you have to think risk tolerance, and I put some links in this article that will help you to determine your risk tolerance and how that will affect your asset allocation into cryptocurrency. Now, there are a whole bunch of other things you might want to consider when you're deciding how much of your investment dollars to allocate into crypto as part of your investment portfolio. I'm going to just hit on two of the potential things you need to consider. And again, I'm going to tell you that this is not financial advice, and I'm not a financial advisor. You need to consult professionals in your jurisdiction to help you. However, I break a lot of this information down in my Cryptocurrency 101 ebook. There'll be a link to be able to get that in the description below. Make sure that you check that out if you're even trying to learn anything about cryptocurrency. I take you from understanding the very basics of cryptocurrency and blockchain technology in this particular ebook and walk you through how to get it, how to store it, how to do your own research, and eventually into a potential breakdown of a crypto portfolio that might work for the average person getting into the cryptocurrency space. Do your own research. You are the bank, and you are the one who makes decisions on one, how you store it, how you buy it, what you do with it once you have it, how long you're going to hold it, and which cryptocurrency allocations are best for you. So again, if you're thinking you need to get all that information, Cryptocurrency 101 ebook, you can get it, link in the description below. All right, so the first point that I think you really need to consider is how much do you really want to allocate toward a cryptocurrency portfolio. So you need to determine ahead of time what is that allocation percentage going to be. Once you determine that, at least you have the framework, and it becomes easier to decide, okay, now where am I going to put the money, to at least you know how much of that money is going to be allocated, and then you can decide if you're going to break it down from there. So for example, if you plan to do 5%, then how much of that 5% goes to Bitcoin versus how much of that 5% goes to Ethereum versus Cardano versus whatever it is you're deciding you need to allocate it. You need to have that initial percentage that is going to actually be allocated to digital assets. The next consideration is asset performance. So once you decide what you're going to put your money into, you need to realize and do a little bit of research as to what is the performance of that particular asset been. So let's bring this together. You need to decide how much of your portfolio, your retirement investment portfolio, you want to allocate to cryptocurrency. That's what you need to do if you're going to be investing any amount of money toward cryptocurrency as part of your portfolio. Not financial advice, not a financial advisor. Head on over to CryptoCoinMindset.com. Link to this particular article to get more details is in the description below. I promised if you stuck around to the end of this video that I'd give you a peek into an asset that I'm investing in, and I think it's positioned itself well for what's coming in cryptocurrency's future, in the blockchain's future, and what's going to happen with regard to digital assets in the future of the financial system. And that asset is Thorchain, ticker Rune. You can see here currently 92 cents, almost 93 cents as of the recording of this video. I'm going to tell you, I'm going to be buying more of this myself because, truth be told, I bought it when it was over $1. So I'm slowly stacking that bag. And why? Let's take a quick look at their website to give you an idea why this is something that I'm doing. So basically, Thorchain allows for cross-chain swaps, basically providing that liquidity. But more than that, you can earn yield using Thorchain for stuff like yield farming, as well as they have a different means of yield where you can basically take your Bitcoin or whatever other cryptocurrency is supported, put it in a vault, and I'm using those air quotes, vault, and earn a little bit less of a yield than you would as if you were providing liquidity, let's say, and never lose control of your assets. There's going to be a video coming out on this channel about that, so stay tuned for that. Thorchain currently is a settlement layer that facilitates swaps between Bitcoin, Ethereum, BNB, Avalanche, Cosmos, Doge, Bitcoin Cash, Litecoin. And as I said, you'll watch for a video on this channel that's going to show you how you can earn money safely with Thorchain. So that's it right there. You're looking for that underlying asset that that I'm thinking is going to go somewhere in the future. Rune, Thorchain, that's the one. All right, that's going to do it for this video. But before you leave, I would like you to consider, if you're looking to invest in cryptocurrency, you need to have as much information as possible. Because of that, I have put together an entire playlist that you can go ahead and view. And it's not just me, it's plenty of other YouTubers and influencers in the space who have tons of information and experience in investing in cryptocurrency. So head over, check out this playlist. I'll see you there, and we'll go through investing in cryptocurrency together. So head on over to that playlist. I'll see you there.